As the world's economy is nearing another great recession, more and more people start looking for ways to preserve their money. The upcoming recession is probably going to be the worst we've ever seen in the 21st century, but that doesn't mean you have to lose your money. Every recession and crisis we've seen has proven that careless people get poorer while smart people earn millions. If you're watching this video, you're most likely a smart person who wants to become wealthy. And as someone once said, chaos is a ladder. In this video, we'll find out how you can enter this recession as a poor and exit it as a wealthy person, what your investment portfolio should look like, and why the recession and crisis are actually good. How do all those investors make money? Surely not by working in factory in 12-hour shifts. Those people are risk takers. They bet on market, buy and sell assets. Growth assets, that's the source of their wealth. Growth assets to acquire value when the economy is growing, but there is no way to be fully confident whether they will grow in the long run or lose their value in an instant. Growth assets are synonymous to risk, very volatile, they fluctuate in value a lot over time. And when recessions happen, all those growth assets lose their value and their holders lose money. If you're trying to save what you already have, you shouldn't have those in your portfolio. What you should have are the defensive assets. The name speaks for itself. The defensive assets are stable, their value never drops significantly but keeps slowly growing year after year. They do yield less profits but are less volatile, less risky. Defensive assets will always grow in value, always, no matter what. I'm not saying that all defensive assets exist to make you rich fast, but they are the best at preserving value and keeping your wealth at the same level even during the most troublesome times. Generally, there are four main assets that can be classified as defensive: stable currencies like US dollar, precious metals like gold, large cap stocks, and real estate. Some of these assets don't sound very stable, but let's analyze each one in detail before making any conclusions. Stable currencies are probably the best way to save your cash reserves. Nowadays, there are hundreds of currencies in the world. Some are pricey like Swiss franc, others just paper like bolivars. In 2022, we have seen the biggest inflation of the last decade, and there is no currency that wasn't affected. Some were affected more, others less. If you want to secure your wealth, protect it from inflation, you need to choose the most stable currency, the one that suffers less from anything that happens in this world: US dollar. So far this year, the dollar is up about 8% against a basket of other major currencies. It has risen a staggering 13.6% over the past 12 months and recently hit a 20-year high. The USA has the world's strongest economy and the value of a dollar fluctuates the least. It does lose its value over time, but does it much slower than any other currency. For example, the euro has lost over 20% of its value in 2022 and now costs less than a dollar, which hasn't happened in 2 decades. All those people who were piling up euros have lost, and those with dollars won. The math is simple, and with the upcoming recession and crisis, you must protect your money, so go ahead and buy dollars while you can. The more you wait, the higher the price. Precious metals and gold in particular have always been a pinnacle of stable defensive assets. Since the dawn of man, gold has been rising in value. Here's what Simon Mikhailovich from the Bullion Reserve says about gold. Physical gold is the only independent, scarcity and enduring financial asset. It's the only asset that is tangible, and it's the only tangible asset that is financial asset. Investing gold is a long-term investment which will be profitable no matter what. Historically, during times of recession, the value of gold has tended to increase. For example, in 1976 to 1978, the S&P 500 fell 19%, while gold increased 54%. The value of gold is not backed by banks or governments, it's non-flat currency. While stocks are plummeting during a recession, gold holds its ground. Investors see that and start buying gold, increasing its value. If you were able to buy gold before investors panic, you would be able to sell part of it at a high price and secure your win. And as soon as the recession ends, the gold will come back to that original stable price, so you will be able to replenish your gold reserves. Now, as you can see from this 2-year graph, the gold price is plummeting after COVID, and now it can be a great moment to buy some before the recession hits. So gold can make a very smart investment during these times of economic troubles. Stocks and large cap bonds are another great way to preserve wealth and earn some more. The asset classes that tend to perform during recessions are from large, well-run companies that are highly valued. However, such companies require more experience since you need to understand which companies are better and more stable. There are certain areas of business that are constantly growing, like healthcare, food, utilities. People need to eat, take care of themselves, and heat their homes regardless of world's economy economics. The companies that fulfill the basic needs of humans will almost never fail. If you choose your stocks responsibly, taking the possible future into account, you would be able not only to save what you already have, but multiply your investment. For example, those who have invested into healthcare before COVID hit have earned a lot since all pharmaceutical and medical companies have acquired additional value. As a defensive asset, real estate is great. Housing always increases its value over time. No matter how many housing bubbles there are, real estate will always come back to a stable growth. Just look at the housing bubble in 2008. The houses that did cost $200,000 in 2003 grew in value all the way up to $514,000 before the bubble bursted. But after a few years of rapid decline, the prices have started their growth once again, but the bottom line was higher. Now we are in the next housing bubble, and a similar newly constructed house again costs up to $540,000. This bubble will burst, and no matter when you buy real estate, you will win in the long run. If you own property, sell it now when the price is peaking. Then wait for the crisis to hit and buy property at its lowest. Then sell all the peaks after a few years and repeat. Even if you won't go all the way through that buy-sell scheme, the house you buy will always be an asset. And headless the world situation in 10 years, it will grow in price. If you want to know more about the current situation in real estate market and the bubble we are in, we have already made a video on that. Check it out. By making smart investments in defensive assets, you can emerge victorious from the darkness of the upcoming recession. Stocks, real estate, gold and stable currencies, those will be your best friends in the upcoming years of economic turmoil. Remember, now is the time to act, the time to prepare. If you won't create a diversified defensive portfolio, you will regret it. What do you think? Are you prepared for the recession, or you don't believe the signs you see? Share your thoughts in the comments down below. If you liked this video and learned something new, hit that like button, subscribe to the channel, watch other videos. See you in the next one.